Even when institutional investors, for example, when they are evaluated on short-term basis, how their performance is in 1 month or 3 months, even they start thinking about short-term performance and the horizon of investment shrinks. So with all these players thinking short-term, clearly short-termism is increasing. And now more than ever, investors need to think longer term.
Hi, Nimesh. So, we've been studying a lot of data that broking companies release. And as it turns out, traders are not really making any money. Even SEBI is saying that there's people are only losing money when they trade in FNO. And still, there's this entire rush towards short term trading. So, why is that happening?
So we get lured into short-term trading. Let me get an answer from neuroeconomics this time. In our brain, there is a chemical that gets generated called dopamine. This is supposed to be a pleasure chemical. Dopamine responds to whenever we get something that we really urge for or crave for. So for example, when you're hungry and you get good food, dopamine is generated. For some people, a dark chocolate or alcohol and profitable investments. So dopamine is affected by the anticipation of making money also. In a way, this trading or short-term trading is akin to having an illegal pleasure drug where your brain feels the same thing. There are two important characteristics of dopamine. One, dopamine, as it is generated with anticipation of money-making opportunity, it actually nudges you to trade and or nudges you to act. And two, if the pleasure is not increased, dopamine is not generated. If you see for investors, it has a lot of implications. First, if you keep watching the ticker or some financial news and you feel you have the opportunity to make money, you think that you have the opportunity, dopamine induces you to trade more. And second, dopamine responds to increasing levels of pleasure. People tend to increase their stakes or trade more in hot stocks to get more pleasure. So in a way, neuroeconomics is saying our brains are tuned to short-term trading, which means it takes a lot of discipline to control those emotions and think about long-term investing.
Then, Nimesh, is it fair to assume that short-termism is increasing?
You are absolutely right. So if you see with the markets doing so well that they have now, it's been like an 8-year bull run that we've had. Definitely more and more investors are getting attracted to equity markets. Typically, new and inexperienced investors, studies show that they chase hot stocks, they like to trade more. There is also a herding mentality. So they follow these short-term trends and tips. Plus, when you look at these trading apps, they don't force you to trade. But they keep nudging you or persuading you to trade because they keep sending you these notifications off and on. And after looking at them, you feel like, okay, I should take profits here or trade a little more there. When markets move very fast in the short term, even experienced investors or traders, they want to participate. And then they also look for short-term data points and trade on shorter terms. In the last few years, we've seen increasing amount of passive investment, algo trading, high frequency trading. These have again tipped the scales towards short-term trading. Even when institutional investors, for example, when they are evaluated on short-term basis, how their performance is in 1 month or 3 months, even they start thinking about short-term performance and the horizon of investment shrinks. So with all these players thinking short-term, clearly short-termism is increasing. And now more than ever, investors need to think longer term.
Then, Nimesh, with so many of the majority of investors, going towards short term, I'm assuming then the runway for long term investors gets clear because there are so many opportunities and fewer investors in that lot then.
You are absolutely right. When majority of the crowd is fighting within themselves for short-term returns, most of them end up with below average or average returns. The opportunity for superior returns for a long-term investor really opens up. There are many financial as well as emotional benefits of thinking about longer term. First, you start loving the downturns in the market. Because if you're a long-term investor, you know that even a good company or a good security can go through a temporary downturn. And you use that as an opportunity rather than fearing a correction and thinking of trading in and out in anticipation of it. The second thing you do is you take advantage of the crowd's biases. If you have a longer term horizon, the overreaction and the underreaction by the crowd, you are able to take advantage of that. Crowd is driven by a lot of emotions like narratives and certain sentiment swings. You take advantage of that. Third, your opportunity set really opens up. See, the crowd who are focusing on short term are focused on hot stocks, glamour stocks that the media is talking about today. Maybe they hit a circuit today or so. There are many good companies which actually fly under the radar. They are not in the news or not that glamorous because they've not moved very fast. You can pick up those companies as a long-term investor, and long-term investor is looking for a good company at a good price. So you get that. One more important benefit of a long-term investment is there are certain styles or certain themes that only a long-term investor can spot. So, for example, projects like Atmanirbhar Bharat, where say government is incentivizing manufacturing, and that will unfold over many years. Short-term traders can't capture that. It's a long-term investor who will see that. Women participation in workforce, and this will have implication on several different sectors. Long-term investor benefits from that. Certain styles also, like value investing. In value investing, you may go contrary to the crowd, and here it takes time for those valuation or re-rating of those stocks to come in. So these stock styles are better for long-term investors. And I think one of the important points is also you filter out the noise. Today we are bombarded with so much data. With the lens of a long-term horizon, you can actually filter out some of the data which is less significant for you in taking an investment decision. So these are a lot of benefits that come to a long-term investment plan.
It seems like long-term investors have it very sorted out. But is that the case, or do they face any difficulties on the way?
So long-term investment horizon doesn't guarantee that you will succeed, but it is a very important ingredient for your investment strategy. There are a few problems that even long-term investors face. One of the important ones is that when you're thinking about the future for the longer term, future is always difficult to forecast. And unfortunately, many analysts or experts also forecast about 1 to 1.5 years. So you don't get really long-term forecast of a business. Here, the way to do it is you actually have a diversified set of businesses. So you diversify a little and buy with some margin of safety. So that if the future doesn't exactly unfold as you expect, then you're still safe. The second part is you need to have the right systems and structures in place. If your clients, your organization are not supportive of a long-term view, it can create a career risk for an investor or a professional investor. So your clients and your organization should be clearly communicated that this is a strategy you're following, it will yield returns in the long term, and your incentives as an investor should also be for the longer term. The third challenge that one has to face is that time is a friend of a wonderful investment, but an enemy of a bad one. Your investment process has to be right so that you are able to identify and select the right securities for investments. Despite these challenges, there will also be some temptation to look at the next quarterly number rather than the next decade. But putting the right structures in place, keeping some discipline within you, and focusing on the longer term will be lucrative for an investor in the long run and far compensate for all the struggle you go through in the short term.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.